The latest move by the Fed is another non-move. Real estate expert Rick Sadle with Keller Williams Realty and SadleRealEstate.com is with us. So Rick, good morning.
Hey, good morning.
All right, give us a sense of what happened with this month's Fed meeting. What was their thinking, and about where are we right now for 30-year fixed mortgages?
Yeah, well, the Fed did nothing again. In fact, this is the fourth straight meeting where they've done nothing. What they're doing is they're holding off cutting rates. Basically, they're saying we're watching the numbers, right? And what they're really looking at is employment numbers and inflation. And while inflation ticked up just a little bit and unemployment trended up just a little bit, the Fed's still kind of in their wait and see attitude. Now, mortgage rates in reaction didn't budge much. They're still hanging around 7%, give or take, depending on the day and your credit score. So all in all, it's not terrible and it's not great. It's kind of just the new norm for now.
Got it. We've been watching the Fed, and it does change, sometimes throughout the day, their stance likely to continue for the next couple of months, unless that changes. What are you hearing?
Yeah, I mean, pretty much I don't think there's much change. Like I don't think, and most experts don't think that we're going to see any rate cuts until maybe, late summer, September, or maybe even after that. The Fed's kind of playing it safe. They don't want to drop rates too soon and risk inflation creeping back in. And with the current administration's pressure to drop the rates and possible kind of tariff backlash, inflation is a real possibility.
Okay, how are ways that buyers can manipulate their mortgage payments regardless of what the interest rate is?
Well, I mean, more money down always helps, right? Because there's less loan. So maybe some gift money from family can help. Maybe buy down your rate. You pay a little more upfront for a lower rate. In fact, 2-1 buy downs are pretty popular right now. It lowers your rate for the first couple of years to kind of ease you in, and then you can refinance. When the rates go down, you can also ask the seller to pitch in, right? Especially if the home's been sitting for a while. I'd say lenders still have a few tricks up their sleeves, so it's worth talking through with the lender.
Some national reports, Rick, say we are shifting to a buyer's market. So whether that's true or not, we'll see here in the Portland metro area and beyond. So what should someone, gearing up for a home purchase take from that, reports like that?
Yeah, I mean, nationally, for sure, I think that's what they're saying. They're shifting to a buyer's market. Here in Portland, Vancouver, maybe not so much, but it's shifting a little bit, right? Buyers are finally getting some breathing room. More homes are sitting on the market for a little bit longer. Sellers are starting to negotiate again. That doesn't mean every home is a great deal. Hot neighborhoods and hot areas like ours are still competitive. But if you're buying right now, you've definitely got more power than you did last year. So I would use it.
Sounds good. Great info, Rick. Thank you for your perspective.
Cool. You bet.
That is Rick Sadle, real estate expert with Keller Williams Realty and SadleRealEstate.com.